China's commodity markets are entering 2026 at a critical inflection point, shaped by a fragile U.S. China trade truce, persistent domestic deflation, and growing weather risks. So, what does this mean for soybeans, grains, and animal proteins in the year ahead? To answer these questions, I'm joined by Ivy Lee, Senior Market Analyst at StoneX and one of the authors of StoneX's Q1 2026 Quarterly Outlook. Nice to see you again, Ivy.
Thanks for having me.
So let's start with this. A big part of your bullish outlook hinges on a U.S. China trade deal, but there's still some uncertainty around and how that actually plays out. How confident are you that China will follow through on large U.S. soybean purchases this year?
Actually, I'm much more optimistic now because we have seen the both sides taking the trade truce agreement seriously over the past few months. And they are gearing up a new round of trade negotiations to pave the way for a potential meeting between President Xi Jinping and President Trump later this year. That is a very positive signal. And China already completed the purchase of 12 million metric tons of U.S. soybeans. And I have no doubt it will make effort to take delivery of those shipments. But I still want to encourage the market to keep an eye on a couple of operational constraints. First, the storage limitation, because we have seen the Chinese national reserves are releasing millions tons of old soybean reserves to the market. That could be a signal that there is limited space for the incoming U.S. soybeans. And secondly, China's domestic crush demand is uncertain. The Chinese official projections pointed to nearly a 5% year-on-year drop on the crush demand, but USDA is much bullish on the demand outlook. So those are factors that may affect the follow-through, and more importantly, they may have big implications on China's soybean trade with other countries.
Last year, they were supposed to buy 12 million tons of soybeans, which they did. China did. What are they supposed to buy this year? What's that number?
They're supposed to, according to the trade deal, they are supposed to buy 25 million or more soybeans for 2026.
Okay, let's move on. In your report, you also highlight a major redirection of soybean trade away from Brazil and towards the U.S. What does this actually mean structurally for Brazil and global soybean pricing this year?
Well, Brazil is going to have its largest ever harvest in the coming weeks. So they need to find new buyers and redirect part of the deal to other destinations. Otherwise, the ample supply will be a big problem for them. When it comes to China bound shipments, because the trade deal helps the U.S. to secure a significant sales to China. So that means those commitment basically covers the majority of China's demand for Q1 and Q4. That means for Brazil, the exporting window is getting severely squeezed to Q2 and Q3. So globally, the supply surplus will be the main thing for the year and weighing on global soybean prices. But for Brazil, the challenge is much bigger. And For Brazil, we may see the structural adjustment in its production for the coming years, and that will hold back Brazil's dominance in the global production and trade for years.
Okay. Let's move on to grains now, because we've seen grain imports fall to multi-year lows, but they now seem to be stabilizing. What's behind the pickup, and why do you expect it to remain capped?
Indeed, we have seen the recovery momentum in China's grain imports in the last quarter in 2025. There are two reasons behind. First is a weather-related crop concerns, and second is a recovering import arbitrage. Because we have reception exceptionally heavy rains during China's corn harvest season, so which caused a large-scale quality problems for corn and had delayed the seeding of the winter wheat crops thereafter. So the crop risks inflated the domestic prices and making the import prices for grains such as corn, sorghum, and barley were more cost effective. So that is why importers stepped in. But the recovery is much more like supply driven. There is no turnaround in demand, and demand remains very weak. The animal feed sectors are struggling, and the consumer sentiment remains at the bottom. And China still prioritizing the self-sufficiency. So there is just no strong underlying demand to support a surge in imports in the near term.
Okay, you just pointed out my next question, actually, because in your report, you talk about the animal protein sector, which you see as a major bearish theme. How does the ongoing pig and poultry destocking cycle ripple through feed demand and imports?
Yeah, that's true. Unfortunately, the destocking cycle for both pigs and poultry are far from over. And those are main primary sectors that consumes the feed grains and the soybeans. But we have seen the Dalian hog futures remained trade in historical low. And the poultry sectors are also suffering through prolonged low producers' margins. And if we look at the imports, the poultry meat and pork meat imports were slashed due to the domestic surplus. And so that means both the pig sector and poultry sector need to control production, cut herds to meet the slowing market demand. And the smaller herds means a decrease in demand for animal feed, and that weighs on China's demand for feed grains and soybeans.
Understood. And before we let you go, Ivy, if we zoom out for a moment, what are the main things that global commodity markets should be watching in China in the first half of 2026?
I would suggest the three things to closely watch. First, the weather is always a key, and this year is particularly tricky because we already missed a good start for the winter wheat crop, and very late seeding raises the yield risk. So we need to see how the weather develops, whether it helps to build the yield at a later stage, or it adds more crop problems that tightens the supply. And secondly, I think China's strategic reserves actions are always significant because they directly impact the China's demand and supply dynamics and the demand for imports. And on top of that, U.S. China trade negotiations are always at the center. We will need to see whether they lead us to a broader trade deal that includes China buying more U.S. farm products beyond the soybeans and include pork, beef, or grains and others. So that will be the most bullish stories for U.S. farmers and also something that global traders need to closely watch.
Ivy, thank you so much for your time. And thank you to our viewers for watching. For deeper insights and analysis, scan the QR code or click the link in the description to download StoneX's Market Intelligence Quarterly Report.